Hello, this is Alex Kazmark for the FXEdge.com, and this is your free daily Forex video for Friday, December 18th, 2009. One quick reminder before I begin, the purpose of this free daily video is education and not an alert service. I'm not going to make any trade recommendations, but what I am going to do is point out levels of support and resistance for the next 12 to 24 hours. Please keep in mind that trading with leverage is very risky, so please don't trade any real money until you've established a proven track record of success on a demo account. Trading conditions are always changing, so make sure to watch Monday's video to stay updated. Well, happy Friday, everybody. And more importantly, the US dollar continued gaining ground, breaking past 145 as if it was destined to do so. The euro did manage to find support at the 143 level and closed the day exactly at the 200-day moving average, which is right around 143.50. This has been 5 big moves in favor of the dollar. Still, I'm not convinced that this is the true dollar recovery rally. Of course it's not. Relative to last year's depreciation, the dollar has much more room to go before we can consider this a shift in the fundamental outlook for the dollar. The 200-day moving average will play an important role over the next 24 hours, and the weekend will give traders some time to think this rally through, and before long, my prediction is that we'll see more dollar losses. The next significant levels are mentioned in this video, and of course, I wish everybody a happy Friday, but one last thing I would like to mention is, at the very least, expect a pullback or a retracement in the short run, at least back up to the 145.80 area, perhaps 145 to meet up with the moving averages, or at least let the moving averages catch up before dollar continues its slide, or excuse me, before dollar continues its momentum, perhaps down to the 140 level. Okay, folks, this is the euro dollar on the daily, trading at 143.35. As I mentioned in the video, the chart closed, the daily candle closed right at the 200-day moving average at 143.50. The dollar has, over the last couple of minutes, gained some more ground down to 143.33. First level of resistance will be at 143. That's level of support for the euro. A break below 143, second level of support, will be at 142. A break below that will target 140.50 and 140 even. If the dollar starts to lose ground and then perhaps some profit taking or retracement or a pullback, expect resistance at 145, followed by 145.80, and then above that we'll be looking for 147, 148.50, and 150. Last 3 levels are far away, so keep an eye on 145 and 145.80 as the more important figures of resistance. Looking next at the pound dollar, trading at 161.46. Dollar continued to gain ground against the pair as well, breaking through this last level of support at the 162 level. We do expect further dollar gains. First level of support for the pound will be at 161.20. Followed by 160.80. A break below that will target 160, and then below that we'll be looking for 158 as the last level of support for the pound for now. First level of resistance will be at the 162 level. That was a level of support, now turning into a level of resistance. Also expect 162.50 in case 162 is broken. Above 162.50, we'll keep an eye on 163.50 and 164.50. Above that, we'll be looking for 167. Moving on to dollar Swissy, continues to gain ground. Dollar continues to gain ground here, trading at 104.83. First level of resistance will be at 105. Level above that will be at 105.50. And then, of course, above that, we'll be looking for 106.50 and 107. If the dollar starts to lose ground and the Swissy gains some of this lost ground back over the next 24 hours, expect support for the dollar at 103.50. Break below that over the next few days may target 102.80, and a break below that 102. The last 2 levels of support will be at 101.30 and 101. Right now, the figures are a bit exaggerated. They're a bit extended, is what I was trying to say. Starting from this move at the parity level, we've gained 500 pips now. We do expect a pullback at least down to the 103.50 level. We don't expect much more of a run higher, specifically above 105.50. going back to 105.50, we saw this level as support for the dollar in late August. Once that was broken, dollar didn't have any problems losing more and more ground. Now that we're back up to that level, 105.50 may be the number where some traders may start taking short positions. Dollar yen trading at 89.73. First level of support will be at 88.20, followed by 87.20, 86.20, and 85. If the dollar continues to gain ground, we'll be looking for 90.80, which is this last pivot high, as our first level of resistance. Above that, we'll be looking for 91.50, 92, 92.30, and 93.20. Keep an eye on this upwards sloping trend line. We'll see here if it does manage to break it and perhaps come down to the 88.20 level before continuation further north. We think that this pair may get tired, and we can see here that if this pivot holds, this will create a lower pivot, and the market might start to swing down. Okay, traders, if you'd like a more detailed analysis with potential trade opportunities, please join us in the members section. This has been Alex Kaczmarek for the FXEdge.com free daily Forex video for December 18th, 2009. Until Monday, everybody, good luck trading.